Hello and welcome, BitMonger family. Hope you guys are all doing well today. I'm having a fantastic day down here in my rainy, in the rainy village here in tropical Thailand. But you know what? From where my home, Seattle, Washington, I'm used to the rain and I kind of like it. So no problemo. You know, these types of gray days kinds of remind me a bit of home, and but it's much warmer here, so it's kind of nice. I like it. Anyways, in today's video, I'm going to be talking about this is a tough one, man. I've had a bunch of buddies recently absolutely lose their shit in terms of trading leverage, and I feel slightly to blame because they saw that I was doing it, and I shared with them what I was doing, and they jumped in, and unfortunately they lost a lot of money. So in today's topic, and I know it's not just them, and I've made similar mistakes, but on lesser amounts of money. You know, thank God. But I think this is a common occurrence with people that try to get into trading, especially using leverage, or I should say excessive leverage, and not following the cardinal rules of being a trader, and the assumption of it just being purely a gamble. And certainly everything's a gamble in life, guys. And you take calculated risk. And if you're not willing to make the calculated part of the risk, and you're just, flipping a coin, well then, if you lose your ass, you need to do everything you can to try to improve your odds in this type of blood sport game of trading. And that's like Fight Club. And I'll get into that in a second. But it really is. It's a blood sport, guys. It's a player versus player. And if you don't have a plan going into a trade, well then, God help you. You're probably going to end up losing your ass and losing a lot of money. So I hope to drive home one message today. I'm going to give a few, but I really hope one message really fucking sticks with you. And I compare it to the Fight Club, a classic pit movie. What's the first rule in Fight Club? It was the first rule, the second rule, third rule. I think they all were the fucking same. And this should be the same with trading. And the number one rule is you need to manage fucking risk. Okay? You need to manage risk. So that means you need to have a plan. You should practice a stop loss, and that is essential. Essential. Especially in these volatile markets where things can swing up and down wildly, and we also know there's manipulation, so you can get extended wicks and get fucking liquidated. So, if you don't practice risk management, you're fucking going to lose. So the number one rule, think of this, the number one rule in leverage trading Fight Club is risk management. The second rule in leverage trading Fight Club is risk management. It's all fucking about risk management, guys. If you don't have a risk management plan in place, you're most likely gonna fucking be a loser. You don't want to be a loser. You need to have a fucking plan, And there's tons of fucking information out there. There's tons of tutorials. Paper trade. And if you don't like paper trading, well then fucking use a small amount of money until you develop the skills, until you're getting a high hit rate before you start increasing any kind of money. I would even say have a set amount of money, a small amount of money, and use that. Try to build it, you know, and if you fucking lose it all, well then that tells you how you're doing. Tells you real fucking quick. You don't add money to the account. You fucking work with what you got. And I would say do it with a very fucking small amount until you really start fucking proving that you are winning consistently. It's really easy for this type of thing to become a, how do you say, kind of like an addiction, you know. And you know, people, you know, I mean there's gambling addictions, but I honestly see everything in life to be a certain amount of gamble, and it's all about stacking things in your odds, you know, trying to do the due diligence to protect your fucking ass, right? And whatever you're doing or you're focusing on is going forward in a manner in which it's going to, you know, benefit you. And you need to really weigh those up and be very mindful and reflective. It's another thing I would recommend any trader do, and that is for you to keep a journal. And by doing so, you should be writing down, you know, your basic analysis that you did, you know, what you're thinking at the time, and then how the trade played out. And if it goes the wrong way, well then, you know, spend some time looking back at, you know, look at the action, see what happened, see if you could have done it differently. You know, you can do all the calculations and everything can be looking right, and you can still, it's just an odds game, guys. So, you know, even if you do all the legwork and the analysis and everything, it can still clearly go in the wrong direction, and you could get stopped out. You know, you're not going to win them all. That's for damn sure. But it's a matter of having more wins than losses, and, you know, having a risk-reward ratio, and the number one rule, managing your risk, having a stop loss, or having some kind of strategy that you're going to be using that makes sense, and that you're willing to lose in case it does go the wrong way. I personally think the best way to trade markets is swing trading and being very patient, setting your orders in at lower fib levels. Like you can see in the background behind me, that's the fib levels, and the 0.618 fib level is generally a good place to put an order in. And oftentimes they won't hit, and that's fine. You never want to fucking chase a trade, okay? That usually will wreck you, feeling FOMO, and not being calculated. And I mean, sometimes it can work in your favor, of course, but generally speaking, it's a very, very bad practice. So do not chase things. Let them come to you, and then practice the good risk management. Where's your stop loss at? And 3-to-1 ratio, generally speaking, is good to aim for. And if you do it right, you can get more than that, a lot more, with inside of really volatile assets. It does go both ways, but if you hit a winner, you can make multiples. Man, I've done it many times. So anyways, guys, I think I'm going to leave it there. I kind of went on a long talk there about that one single topic, but I think it's something that anybody who's getting involved in leverage trading needs to be hammered into their fucking brain, that if you don't manage your risk right, you're super high probability that you are going to be a loser. And Everybody wants to win. That's why we're here. We're here to make money. So keep that in mind. Also, being a swing trader, like I mentioned earlier, I like to look at the 4-hourly and the daily chart for those setups. You know, if you start going into much lower time frames, you know, the lower the time frame, the more of a coin flip it's going to be, guys. So keep that in mind. You know, very, very few active day traders are real winners. The guys that usually make the most money are the long-term investors. And if you're trading crypto, usually the guys that make the most money are guys that bought the fucking bottom and held on to it, or swing traders who are looking to trade a coin. It can be anywhere between a few days to a couple months, maybe. Generally, it's a little bit shorter than that, but you can hold them that. It depends on your entry and what you're seeing in the market, but generally I'm okay with that. Depends on the funding rate too, of how much are they charging you to have that open position open, and it's not that bad. I'm not using a huge amount of money. This is more of a hobby for me, guys. All of my real investments are long-term holds, and it's very diversified across tech stocks and crypto, bit of gold, and some shit coins, and some other very, solid, traditional type stocks that I know aren't most likely going to fucking die ever, but they should be just fine. But the reason why I'm that diversified is because I've managed to make a nice chunk of money through my crypto investing. So that's how it looks now. Back in the day, I was heavily allocated into more crypto, more so than the stocks. I did have some stock holdings, but they were primarily in extremely, tech, only tech stocks, and those have done well for me. So yeah. Anyways, I'm going to leave it there, guys. If you're into Leverage Trading Club, #1 rule, risk management, guys. Have a good one, and monger on.